Today, Wall Street has stalled its rally. The US stock market opened in the red as stock bulls have got a more sensible view on the reality. The US dollar index is still following the downward bias, though some investors are poised to buy the US currency. Investors cheered the news that employment in the United States contracted to a lesser degree in April. Nevertheless, rates of job losses are still worrisome, reminding about the worst troubles of the global financial crisis. The elevated mood of stock buyers is ebbing. Today, the U.S. equity market opened with some losses. Futures on the Dow Jones fell 0.46% to trade at 26,106. The S&P 500 shed 0.54% to trade at 3,188. The market took notice of some negative macroeconomic data. U.S. trade balance deficit expanded to $49.4 billion in April instead of the projected $19 billion. The number of initial jobless claims came in at 1,877,000 last week. That is 249,000 lower than in the previous week. However, economists had expected a more moderate decline to 1,800,000. Besides, the market sentiment is dampened amid ongoing jitters between the United States and China. Currency markets are more sensitive to changes than stock ones. In the Asian trade, the US dollar was regaining footing across the board. Later in the New York trade, the greenback opened in the red. Its index is trading at near 97.50. Now investors are trying to reckon how deep the greenback will fall. Anti-China stance of Washington did not halt its decline, as investors are anticipating the prompt recovery in the US economy in the wake of the pandemic. Stock investors are following this strategy for the summer. If this prediction comes true, the US dollar is likely to lose its shine gained amid the coronavirus panic. The euro winds the most in the US dollar index, so the notable advance of the euro pushes the US currency down. Today, the euro-dollar pair is trading above 1.12 at the highest level since mid-March. The Canadian dollar rose to the strongest level for the recent 2.5 months against its American rival. The loonie gained 1.35 amid the broad-based weakness of the US dollar and the rally of oil prices. Moreover, the Bank of Canada has improved its stance on domestic economic prospects, that is bullish to the national currency. Earlier, the regulator estimated that the crisis would slash 15–40% from Canada's GDP. Now the central bank reckons the damage at 12–22% from GDP. Meanwhile, crude oil is trading under pressure due to the news on the OPEC Plus pact. Both benchmark grades are expected to close today with losses because some participants are unwilling to comply with the oil production cuts. That's all for today. You're watching financial market news on InstaForex TV channel with me, Kate Stichina. We wish you profitable deals. See you tomorrow.